Touch base with the management of Thermax on their earnings. Mr. M.S. Unnikrishnan, who's MD and CEO of Thermax, joins in to discuss that and more. Mr. Unnikrishnan, it's great to have you on the show. As per the press release, Thermax is working towards a definitive agreement with Babcock and Wilcox to acquire a TBWES joint venture. Why do you want to acquire the balance stake in the JV?
Well, specifically, it's a world-class facility which we created with a lot of pains. It's a very modern factory which can make both supercritical, captive and subcritical boilers, which is also manufactured and exported out of that for the joint venture partner for various countries in the past 2 to 3 years' time. But the partner has gotten into some financial difficulty and their market cap has come down substantially. They sold off their joint venture in China to their Chinese partner, which is the government of China. So we look forward to, in any case, expanding going forward. We are intending to grow as a company. A new facility of the kind would certainly be at a price at which we are able to strike the deal, very favorable to the company. Apart from that, Tanvir, we will also be getting the license continuity for supercritical boilers and also for air pollution control equipments, especially nitrous oxide control, which is going to be a market going to open up in India in the next maybe few years down the line. So we felt it very comfortable and certainly a good buy for the company.
Okay, and we hope it's value accretive as well. Give us your sense on the margin picture this time around. I think that's top of the mind, because from double digits coming into single digits, up 10%, has got the market a bit concerned about execution risks and cost management. How would you defend the margin performance, and what's the way forward?
There is only one answer for it. We underperformed in terms of the top line revenues for the quarter. We could have done maybe a 10% more, which could have automatically lifted our margins for the year to a double digit. We are at 9.6% PBT and a little more, 9.8 at EBITDA level. So shy of a double digit. So the top line reduction is on account of the fact that we were not very particular to push some projects in the last part of the year, whereas it started picking up in the month of April. So that's the only reason that can be ascribed. But if you look at Thermax Limited, which is a predominant part of the turnover, our PBT or an EBITDA on both the sides, we are better off than the previous year. But subsidiaries, especially the overseas subsidiaries, we've had some setbacks. Especially the European subsidiary had a negative for the quarter. And also the Chinese subsidiary, though it would have been almost closer to an EBITDA neutral, we had to provide near to, I would say, a fairly large sum of money towards a provision towards some ongoing litigation, which in our opinion may not be needed, but the prudency demanded that we make a provision for it. These are one of things for the quarter. But you should look at the better things which has happened. Fourth consecutive quarter, we have had substantial improvement in the order intake, taking it to an all-time high of 6,380 crores to be booked in by the company, which has lifted our order carry forward by into the next year, order book by 43%. I'm sure this should help the company going forward. Margins, when you do at a higher level of operations, naturally your profits should also be improving. So that's a take on that.
When you say your order book is at an all-time high, can you give me some visibility on your operating cash flows and your cash flows also? Order book is an indicator of the business, but what markets focus on is that which way operating cash flows and cash flows are also moving.
Nikunj, unlike last year, in the current year, after spending for the chemical factory which we commissioned, and part of the expenses already paid for the Sri City factory coming down in south, we got a cash flow in excess of the profit after tax. And that is a very positive indicator. Whereas in the last year, we had a negative cash flow, overall. So it is turned positive. And my treasury today, at the turn of the year, on 31st of March, was in excess of 1,100 crore. It's all again gone up, which I can't disclose the number as of today, but it's upwards moving. For the company of our size to have a treasury of 1,100 crore and no debt at all on the balance sheet, isn't that sufficient as an indicator as to how good the performance of the company is? So when the market is in a very difficult state, here is a company operating in long-term project business where hardly anybody has got this kind of balance sheet cleanliness. I repeat it, no debt at all. have bank limits available of 4,500 crores of rupees and a 450 crore cash limit underutilized or unutilized remaining. So we manage with our own cash, and we had been quite prudent in managing the balance sheet of the company. It's a very positive indication. We still have money to be doing whatever we feel like expansion or to take larger orders. All that is available to the company, Nikunj.
Another important indicator for capital good companies is the IP data, and frankly the IP data in last 3 or 4 readings has confused me more rather than giving me an indication. How should one look at the IP data and then understand the big picture?
Again, we as a company today have in hand and applied for over 200 patents, which no company in the energy environment field, including some of the largest in the country, has ever done. We have our own Research Technology Innovation Center. There are products, just to give you an example, I don't know how many people are aware of the fact that India, for Indian submarine Scorpion program, it is Thermax which has developed a phosphoric acid based fuel cell which is going to be deployed in the new submarines going to be constructed. This is a technology we created along with the defense laboratory. We are the first in the nearby area in Asia to create a gasification technology which can produce petrol or diesel from coal. So we are at the cutting edge of technology development, which possibly we don't talk much about outside. So in the area that we are in energy environment, there is nobody to compete with us in terms of technology and IP availability. And unlike many other Indian companies who never bothered for, we are very particular about IP protection and filing of patents. As I mentioned about, we started it only 7 or 8 years back. Today we have crossed 200 patent applications, of which half of them are already registered with various countries, and these are all global patents, not domestic patents. IP is very strong with the company. Apart from that, I also need to admit that we have technology tie-ups with companies like Babcock and Wilcox, which is also giving us high-end technology for larger capacity boilers. So IP-wise, we are one of the strongest companies, possibly in the developing world. I don't think there is anybody better than us.
Let's get closing comments from you, and then you also can see footage coming from National Stock Exchange where Indostar is going public, and we'll just quickly talk about it. Give me one reason why you are sounding more optimistic than you were in 2017. We've had similar conversation in 2017 after your Q4 numbers, and you were sounding slightly tentative last year. Right now you're sounding optimistic. So what is that one factor which is making me feel that you are much more optimistic?
4 quarters consecutively, Q1 to Q4, we had been able to have an order intake ranging between maybe a 30 to 65% more, which has resulted in order carry forward on order book, which is 43% better than the previous year as I got into FY17 versus FY18 versus FY19. So naturally, it gives a higher level of confidence for the year and maybe. And second, Nikunj, this is the most important reason. Second is, I'm also seeing a lot more of improvement in the inquiry inflow coming from various parts of the world, and some of which should get fructified in the going forward, which would mean we are looking ahead for a little better time than what we underwent in the past maybe 4 or 5 years. Entire industry, capital goods industry was in deep difficulty. Looks positive. It was very positive for the last year and looking even slightly better than what it was in the last year.
All right, sir, appreciate your time. Always a pleasure to have you, and I'm glad that you're sounding optimistic. And it's often said that capital good companies, when they are sounding optimistic, that really is the big turn for the economy, and that is a big turn for private sector capex, which up until now has been in some kind of in doldrums.